Your second pick for a stock that could be a good short squeeze candidate is not in the AI realm, but it's a brand many people are familiar with.
Right, it's RH. Now, the company, the stock ticker is RH, and the name of the company is RH, but many investors may know it better as Restoration Hardware. It's a premium supplier and manufacturer of home furnishings. So, obviously, as you would expect, in 2020 and 2021, the company was doing very well. The stock was doing very well as people were buying houses, they were relocating, they were renovating the houses they did have. In fact, at one point, RH stock went up over $700 a share. Well, yeah, it's at 241 right now. So it's gone down significantly since then. And you would expect that for all of the reasons that we talked about now. The housing market is tighter. People who have looked to do renovations on their home have already done it. Others that might be looking to do larger renovations might be holding off, waiting for more favorable interest rates, waiting for inflation pressures to come down. That's where the opportunity may lie. We have a Federal Reserve that is likely to cut interest rates when they meet next week. That may not trickle down to consumers right away, but it is expected that if that happens, you might start seeing some loosening up in the housing markets. In any event, the stocks tend to precede the overall market by 6 to 9 months. So now might be an interesting time to get in on RH. And if that stock if the company does happen to improve their earnings outlook, because right now revenue is about at 2019 levels. So it's not too bad, and it's about where investors might expect to see it. The problem is that right now their earnings have been negative because as a company, they're facing the pricing pressures that are coming from supply chains and inflation and all that. If that turns around, you could see the stock start moving up higher. And again, it might be an interesting short squeeze candidate.
Now, does every short squeeze have to happen with that fan following like we saw in GameStop, or can it happen by the kind of economic factors you just talked about?
Yeah, I think it can be either one. In fact, I think what made GameStop so unique was the fact that the short squeeze happened in absence of any real fundamental reason for it happening. It was sort of a mania. And again, that's not to judge it one way or the other. It's just to say it did happen without any fundamentals. Many short squeezes happen because of some fundamental catalyst. And it's also important to note that many short squeezes never get to the level where GameStop has, which is again what made GameStop so unique.